So guys, this last year in my portfolio has just been incredible. It's been one of my best years on record for sure since I started investing, and the growth has just been insane. If we take a look at my portfolio performance over here, this chart that we're looking at goes all the way back to, it looks like July of 2022. And from this point in time up until about a year ago, heading into November 2023, we can see from the chart that the portfolio's progress was pretty flat. There really wasn't a whole lot of growth in this time period, but all of that changed as we made our way into November of last year. And from that point on until now, things have just really taken off. The portfolio has absolutely exploded. And if we zoom in on the chart, just focus in on this last 1 year period, we can see just how much growth there has been, guys. In the last 365 days, basically from the start of November last year until now, the portfolio has climbed about 31%. So like I said, it has just been a crazy year, guys. And in this video, we'll take a look at the 5 stocks that have really driven a lot of this performance, the 5 key players over this last year. We'll take a look to see how each one of these has performed, and I'll show you my position in each one as well. But real quick, guys, before we get into those stocks, that chart that we were looking at just a moment ago was from Snowball Analytics, which is actually the sponsor of today's video. This is a really cool portfolio tracker that I've been using pretty religiously lately. We're going to use it a lot more in this video, and I want to tell you a little more about it. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Swiss Army knife of portfolio trackers. I've been using this platform to track my own portfolio for a while now, and I'm extremely impressed by just how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and I found the platform pretty easy to navigate. Plus, it's packed with more charts and graphs than you can count, which speaks to just how much insight it offers not only into your portfolio, but also at the individual stock level as well. Pretty much anything you want to know about a company's financials or dividend history can be found here within the platform. Now, in my opinion, what really sets Snowball Analytics apart are the features it has designed specifically for dividend investors. I'm actually convinced that this platform was made for us, and here's some of my favorite features. First off, Snowball tells you your total returns by default throughout the platform, which may sound like a small thing, but it's crucial for dividend investors because it doesn't neglect the dividend income we receive when calculating returns. Most other portfolio trackers will only show share price returns, which really is only half of the equation, so it's refreshing to see dividends factored into these calculations. Additionally, Snowball also has a pretty robust event calendar that keeps you updated with upcoming news, events, and dividend payments. They even have a dedicated dividend calendar so you can see who's paying you each month, when they're paying, and how much they're paying. And then another favorite feature of mine is Snowball's backtest tool, which lets you see how your portfolio stacks up against the S&P or any other benchmark across multiple time periods. And once again, dividends are included in the calculations, which is awesome. So overall, if you're looking for a great portfolio tracker, which once again is something that every investor needs, I highly recommend you check out Snowball Analytics, which you can actually do for free. All you need to do is click the link in the description or in the pinned comment, or just scan this QR code right here to get a free 14-day trial. And if you like it, you can save 10% on your subscription using the code Ryne Williams. I've personally really enjoyed using Snowball Analytics, and I know you will too, so definitely check out that 14-day trial, and don't forget to use the code Ryne Williams to save 10% on your subscription. But anyway, guys, getting back to those 5 stocks, this first one on our list today, which is actually going to be my 5th best performing stock in the last year. This one is a company that I really haven't talked about in quite a while, but it's been an incredibly strong performer. This one has been on a set it and forget it mode, and it's worked out pretty well. This first stock, guys, is none other than Lowe, ticker symbol LOW, which as we can see is up 41.6% just in the last 365 days. And this is looking at the total return. So this includes capital gains and dividends. And as we can see, the capital gains are pretty sweet. I gained about $1,250 in the last year from this one position, and also brought in almost $75 in dividends. Now, taking a look at my full Lowe's position over here, guys, I would say that this one is pretty middle of the road as far as position size goes. We can see I have about 16.4 shares at an average cost that I'm very proud of. This is very sweet, $194.50, and the share price has run up quite a bit above that. In fact, I would say it's possible to see the share price here pretty soon up $100 above my cost basis. We'll see if it ends up getting there, but in the meantime, guys, this is going to leave me with a 40% share price return, or almost a 40% share price return, and a 44.36% total return. And I would be remiss, which is a phrase that I never use, but I would be remiss if I didn't mention this company's dividend stats. I mean, the starting yield isn't the highest right now, 1.7%, but my yield on cost with Lowe's is looking a lot better at 2.4%. I can live with that, especially when we have this dividend growth rate right here coming in at about 17%. Lowe's is a dividend growth monster, and they're also a dividend dividend king with over 50 years of dividend growth. So this has been a very strong performer in my portfolio, and I'm happy to have it. But anyway, now moving on to the second stock of the day. This one is also going to be the fourth best performing position in my portfolio, guys. And this is also one of my highest yielding stocks. This one is going to be Altria Group, guys, who just beat out Lowe's for that number 4 spot by, it looks like, about 3 percentage points. So pretty nice returns, both in terms of capital gains and dividends. Here it looks like I gained about $790 just from share price appreciation, so that's pretty sweet. And the dividends weren't too shabby either, coming in close to $220 for the last year. And if we take a look at my Altria position, this one is towards the bottom. I don't have a super large Altria position. It used to make up a larger percentage of the portfolio, but I haven't added to it for a while, so it's kind of sank towards the bottom of the pack. But nonetheless, guys, I have 56.2 shares of Altria at an average cost of $42.63. And right now, the current share price is sitting at just about $54 per share. But I'll tell you guys what, it really was not that long ago that Altria's share price was down deep in the dumps. If we take a look at the share price performance over here, we can see that it wasn't really that long ago. I mean, April, the Altria share price was sitting in the low 40s, and prior to this, it even got down into the 30s, which was a great buying opportunity. I wish it was one that I'd taken advantage of, but unfortunately I did not. But I still held on to my shares and benefited from this strong share price performance in the last year, which, if we go back to my position over here, is going to leave me with a 26.8% share price return, which is not too shabby. But thank goodness for those dividends, guys. For this position right here, it definitely gives it a nice boost, and that's going to leave me with about a 46% total return. And like I said, this is one of the highest yielding stocks in my portfolio. The forward yield here is sitting at about 7.5. My yield on cost is 2 percentage points above that, so we're able to lock in a much nicer yield on cost. And the dividend growth rate, all things considered, considering how high this yield is, really isn't too bad. I mean, 4% paired with a mid 7% dividend yield, I think these are pretty well balanced here. And Altria is also a dividend king. I think they've raised their dividend 59 different times in the last 55 years. But anyway, guys, now moving on to our next stock of the day. This is the third best performing stock in my portfolio over the last year. This one is AbbVie, my friends, who has been on an absolute tear this last year. We can see that AbbVie's up 48.4% on a total return basis. And my only regret with AbbVie is that I don't own more of it. Taking a look at my position here, we can see that this is my third smallest position, just right in front of Blue Owl Capital Corporation and Clear Secure, which is the newest addition to my portfolio. But as far as AbbVie goes, I only have 10 shares at a very, very nice average cost of $114.20. Right now, the current share price is $199.50, and we've seen it briefly get above $200 per share. It is really tickling that line right there. But either way, my returns are looking very juicy, about a 75% share price return and an 86.4% total return. And taking a quick look at the dividend stats, these are fantastic. The starting yield's at 3.25%, which is not too shabby, especially with this 7.7% 5-year dividend growth CAGR. I think these are pretty solid dividend stats when you combine them both, but my yield on cost is so good, guys. 5.7% paired with this dividend growth CAGR. I mean, I can't complain. And now, guys, with that, moving on to our fourth stock of the day. This one is the second best performing stock in my portfolio over the last year. And I'll tell you what, this one really surprises me because this one has been an absolute roller coaster this last year. And for a great period of time, I was actually down in the red on this position. Believe it or not, guys, this one is KRC, Kilroy Realty Corporation, back from the dead with a killer 53.2% total return in the last year. That is rock solid. And just taking a deeper look at the share price performance real quick, like I said, this one has been such a roller coaster, guys. It's had a really good month. KRC is up 9.3%. If we zoom out looking at the year-to-date performance, it's not much better, up almost 11%. But here's where the gains start to get really juicy. If we zoom out over the last 1 year period, this is where it's up 52.4%. And as far as my position goes, I'm happy to say I'm back in the green by quite a bit with KRC. I have 77 shares at an average cost of $37.48. Right now, the share price is in a good spot, $41.54, and it really wasn't too long ago that we saw this share price actually get as high as about $45 per share, and it would not surprise me to see it get back up there. I mean, this stock has just been so volatile lately. It's been all over the place, so really nothing would surprise me with this. But now, for the meantime, I'm up 10.8% looking at the share price returns, and including dividends, I'm up twice that amount. I'm up 21.2%. And I'll tell you what, during all that time where my position was in the red, this one was really not a difficult one to hold on to. I mean, definitely getting paid a good amount to wait, a 5.2% yield. My yield on cost is 5.76%. So like I said, this was an easy one to hold on to. Just continue collecting those dividends. And with that, my friends, that's going to bring us to stock number 5. This is my best performing stock in the last year, and probably not much of a surprise, but this one is Williams-Sonoma, who absolutely crushed it by a long shot. It wasn't even close. I mean, the total return from this stock in the last year was 82.56%. And right here it says there was a realized P&L, but that wasn't the case, guys. Williams-Sonoma did a stock split earlier this year, and I'm thinking that's why it's registering some sort of realized gain, but that wasn't the case. I didn't sell out of any of my shares. I've just been holding strong with Williams-Sonoma. And looking at the share price performance real quick, even with all of this strong performance, we can see that recently Williams-Sonoma has seen quite a pullback, guys. The share price has really come down, and if we zoom into the 1-month period here, we can see that the stock is down 8.8% in the last 30 days. And just on Friday, before the market closed, the stock finished down 3.2%. So a decent pullback here. But even with this pullback, guys, we're still in great shape. Definitely nothing to worry about here. I have 36 shares and an average cost of $66.54. So the current share price is still almost 2 times my cost basis, which is going to leave me with a 95% share price return and still over a 100% total return here. And Williams-Sonoma is another dividend growth monster, guys. I was fortunate enough to lock in a 3.4% yield on cost paired with an 18% 5-year CAGR, and this one is just, it's going to be a great dividend growth stock to hold on to, and I'm looking forward to seeing what the future brings for this company. So overall, guys, like I said, it's been just an incredible year here in the portfolio, and I'm really stoked to see how things have turned out here in 2024. And all of this great performance is really helping me inch closer and closer to that $100,000 mark. One of my goals for 2025 is to officially hit 6 figures in the portfolio. And in this next video right over here, I'm telling you exactly how I plan to do that. And it should be pretty straightforward. I mean, the bar to get there is pretty low, should be totally doable. But anyway, click right over here to check that out, and I'll see you in the next one.